weekend, all. Ira Epstein with your metal market wrap-up, and this is your weekly edition, and this is for Sunday, and we are now at the 20th of March, 2022. Now, I've been doing these on Sunday the past few weeks. I'm going to probably drift back to Friday or Saturday doing them, but I've been waiting to get the latest data I can on the Ukrainian situation, and frankly, I just think it's going to bog down for a long time to come. Ukrainians with basically nothing have done a phenomenal job of fighting back as best as they can against Russian forces. You know, at the end of the day, I think Russia will win. I've told you that on the ground. But I think the cost is going to be immense. I think that once they go city fighting, and that's what they're doing now in Mariupol, they're going to discover every apartment they go into, there's children, there's women, there's young men and older men all waiting with guns to blow off the Russians' heads. Fighting in a city is so different, as we've seen in Iraq and other parts of the world in the Middle East, than trying to fight on an open landscape. It is really a bloodbath, generally for the invader. That doesn't mean that the people protecting their city don't get slaughtered as well, but that's just how it typically works. By the way, in Russia on Friday, their central bank held interest rates steady at 20%. Of course, the ruble keeps getting smashed. And, they talk a big game. The problem is their next meeting's April 29th. There's going to be so much more pressure on them, so much inflation pressure, because the world is shutting off everything to Russia. Australia today joined more export news shutoffs, alumina. So now the aluminum, and they get 20% of this product Russia did from Australia. That's another big export market they're going to hurt. Russia's bold because they're one man that carries the face, but it's not reality if you're watching the leaks that come out of the country. In any case, gold, this is a monthly chart, has so far not been able to mount a close over the upper Bollinger Band, which is 1940. The market's at 1929.30, thrown back there. It's a resistance zone, but you are in an uptrend. Certainly, I think traders galore would want to buy this market on pullbacks to 1815 with stops under the 1754 level, but I don't think you're going to get anything like that right now. On a weekly close chart of the market, you can see how you peaked out and you're starting to drift back. The highest close we had was last week at 2078.80. That was the week of the 11th, and look where you're at. Now, I want to point this out. Don't just go over this. The high of the week, the high close there was 2078.80, right? And by the way, that was the high of the week. Now you're at 1929. It's a $150 drop to this close from the high of that week. That's rather immense, don't you think? When you look at the chart pattern, what do we have? We have a pattern of a lower low and a higher high. It is not yet in that pattern that I want to see of higher highs, higher lows. We most certainly had that vertical price run up on the Ukrainian news, and bing, away you go. But I'm looking for the big support at 1844, roughly to 1824, right in that general zone. I think there'll be a lot of traders looking to gobble the market up on the long side there. The inflation story in America and other parts of the world, the Ukraine story, there's plenty of news there. Why should the market fail here? Because you don't stay over the upper Bollinger Band more than 5% of the time. If you haven't learned how to work with Bollinger Bands, do yourself a favor. Go to our website at www.iraepstein.com, and under the word education, take a look at the Bollinger Band course I have there. I think you'll learn a lot. In any case, I'm looking for support here, resistance against that 1967.80 level. When you look at momentum turning down. So the market had that thrust up, and now it has to digest that. Now it can go sideways to digest it. It could try to rally, but I doubt that it'll be successful in staying over the upper Bollinger Band very long. Or it can drop back, get rid of the overbought condition, and find support down here. I'll wait and see which one. The gold-silver ratio sort of stalled out, but as long as it stays underneath 78.35, the 18-week average of closes, it gives a bias to the upside of silver versus gold. Like the gold, silver also has a pattern on the weekly chart of a lower low, higher high. What else? unable to stay over that upper Bollinger Band, to be expected. Where should you look for support in the market? I think from 2,400 back to the 2,355 level, right in that general zone. In copper, I was pushing and showing my morning subscriber videos that I thought the 244, let me say this right, 444 level was going to be a big support zone in the copper market. You didn't take it out. You came down to 446 even. What do you think the 18-week average of closes was, where I think the pros bought? 446.15, stops at 443.95, and I think they're looking for the upper Bollinger Band. I talked about that in my subscriber video. In the platinum market, you have a higher high, lower low. Now, platinum and palladium are Russian exports, big ones. But the slowdown in the world economies because of inflation also slows down the demand for that to a degree. And what we saw was the market properly went up when it realized how important Russia is to that market. And you're going to lose the product because people are just going to cut off everything they get from Russia. But at the same time, you went to the Bollinger Band. And I know people will argue, Ira, it's different this time. The market's going to do this and do that. Let me tell you my 53 years of this. It's not different. Markets pay attention to Bollinger Bands regardless of the circumstance because the algorithm adjusts to the circumstance. The algorithm looks at one thing, price. When I look at the dollar index, I can argue right here that you've got a lot of resistance. Why? Upper Bollinger Band. You don't stay over it. I know you're all going to tell me, oh, Ira, everybody wants to own the dollar in this. Well, the simple fact is the dollar's been getting hurt recently because the world believes that the 7 or more interest rate hikes that we're baking in is going to put the U.S. off to a recession. Now, tonight, I took some reports out of Bloomberg that talk about pre-recession, as you get into the recession and after recession, all the different sectors, material sector, health sectors, I can go on and on, what they do at each stage, got the graph of it, and I show which sectors you want to be in at certain times, which ones out as you're approaching that. If you don't get my research, my written research, you might want to go to the website and sign up for a free offer of that. And by the way, I want to remind you, this coming week, as we get ourselves going, I'm going to do a webinar, that's what I'm hoping, a live webinar on Thursday. Look for the invites to go out sometime tomorrow. If you're on my mailing list, you'll get it. If not, you'll see how you can get that here. We fill up 1, 2, 3, and that's how it works. I'm Ira Epstein. You have a great day.